Yes, sir.
Okay. Now let's look at it one after the other. What is the meaning of warrants? What is the meaning of expenditure control? What is revenue, types of revenue government also meant to look into, and how you are meant to control the revenue. Yeah, this is where we are. When we say warrant, warrant refers to as document of authorization. Document of authorization. And looking at it from this aspect, before expenditure can be incurred, or before they can incur any expenditure in the public sector, there must be an authorization and approval of this expenditure. And what make up this authorization and approval is the release of warrant, which is the power given to the Minister of Finance. It is the duty of Minister of Finance to release warrant as one of the means of controlling the expenditure in the public sector. Releasing the warrant simply means that authority has been granted to the Accountant General to incur expenditure or to approve any expenditure to be incurred by any officer in charge. That is what is meant by warrant. The original copy of this warrant will be addressed to the Accountant General, while photocopy will be forwarded to the Auditor General, in line with the Constitution and what the Minister of Finance is meant to put in place as part of his own right. Minister of Finance also has the right to remove from the budget or the estimate put in place by the government that the money we have, or based on some reasons, they remove some words, some expenses that they cannot incur that particular expenses now. Money cannot pay on those expenses for now. In the future, they will work on that and release another warrant. Now, all these warrants we are meant to discuss them, but this warrant depends on the nature of expenditure. We have two types of expenditure in the public sector. We have what we call recurrent expenditure. We have what we call capital expenditure. Recurrent expenditure is refers to expenditure that is meant to be incurred on a regular basis within a given year. While capital expenditure are expenditure that are supposed to be a special project or for capital projects that are durable in nature. They are not commonly occur on a yearly basis. They are capital projects. Now, as a result of that, warrant is also divided into two. We have what we call recurrent expenditure warrant, and we have what we call capital expenditure warrant. Now, the recurrent expenditure warrant is authority, is the document of authority released by the Minister of Finance to the Accountant General to spend money from the Consolidated Revenue Fund account of the federal government. Now, we need to now look into them one after the other. What it means, what we mean by recurrent expenditure warrant, and what we mean by capital expenditure warrant, one after the other. Now, the first one we are looking at now, we are looking at what we called recurrent expenditure warrant. What does it mean? Let me read the body before moving to that. It said government must be properly authorized and approve its expenditure. The authority which confers power on the officer controlling expenditure or both, we've done something like that before, to incur expenditure is called warrant. All warrants should be issued and signed by the Minister of Finance. And warrants can be divided into two, which is what I've made mention of. We have what we call the recurrent expenditure warrant, and we have what we call capital expenditure warrant. What is recurrent expenditure warrant? This authorization is issued by the Minister of Finance to disburse from the Consolidated Revenue Fund. I've said something like that now also. Now, recurrent expenditure warrants under discussion have the following. We have what we call annual general warrant. I've made mention of this one under expenditure control, AGW, annual general warrant of recurrent expenditure. We have provisional general warrant. We have supplementary general warrant. We have reserve expenditure warrants, we have supplementary contingency warrant, we have supplementary statutory expenditure warrants, we also have environment warrant. These are the warrants we have. As we have it under the current expenditure, we also have it under capital expenditure like that. Now, looking at it one after the other, the first thing we are meant to look at is annual general warrant. Annual general warrant is the warrant released by the Minister of Finance to the Accountant General for the personal emolument of the officers or of the public employees. Now, under this must have been included in the estimate or the annual budget of the country before they can release such warrants. Minister of Finance may exclude from the annual general warrant some items, some expenditure items can be excluded. If he wishes to do that, he can exercise his rights in doing that. That is what we call annual general warrant. And a copy of that will also be forwarded to the Auditor General. Now, let's read it from what we have in the material, whether it's even from what I've made mention of. This authorizes the Accountant General of the Federation to release funds for the payment of personal emolument and other services provided in the approved estimate or budget. It also authorizes the officer controlling expenditure vote book to incur expenditure. We have said that. However, Minister of Finance may exclude from the annual general warrant any item of expenditure which he desires to exercise special rights on them. Copy of this warrant will be addressed to the auditor, to the Accountant General, while the photocopy will be addressed to the Auditor General. We've said all this. That is what we refer to as annual general warrant. Any question? Any question? Now, provisional general warrant. This is another warrant to be released by the Minister of Finance when the budget has not been approved. And this can be in operation for maximum period of 6 months. And the spend must not exceed the last year figure. That is what we call provisional general warrant. Copy of this will be addressed to Accountant General and duplicate will be addressed to the Auditor General. Let's also look at what the material here is also saying, whether it's the same thing with what I've said or not. This is issued at the beginning of the financial year before the Appropriation Act comes into operation. That's before the approval of the budget. It provides the continuation of service of government on a scale not exceeding the level of this service in the previous financial year. The warrant will be in operation for maximum period of 6 months or until approval, until Appropriation Act come into effect. Whichever is shorter, the amount expended under this provisional general warrant must not more than the sum expended during the same period in the previous year. Such money utilized shall be set up against the amount provided in the Appropriation Act, that is in the budget released by the National Assembly. When it comes into operation, original copy of the provisional general warrant is addressed to the Accountant General of the Federation, and duplicate copy to be what? Sent to the Auditor General for the Federation. Any question? Any question? Okay, that is what we refer to as provisional general warrant. Aside that, We also have supplementary general warrant. Supplementary general warrant. The supplementary general warrant is another warrant to be released for additional personal emoluments being provided for as a result of additional budget or supplementary budget or estimate. This warrant will be released by the Minister of Finance. Moreover, Minister of Finance may exercise right to remove some items on which he desires to exercise his special control. Do you understand that? At any point in time, for additional money to be spent on what? On staff salary, then they need to release what we call supplementary general warrant. Original copy of this supplementary warrant will also be addressed to the what? Accountant General of the Federation, while the duplicate will be addressed to the Auditor General for the Federation. Another one is what we refer to as reserve general warrant. For those items that Minister of Finance has exercised his own right to remove some items from the annual general warrant and supplementary warrant, then in that is going to release what we call reserve expenditure warrant to take care of those ones that he has exercised his own right by removing some items from the estimate or the annual appropriation released. To take care of those items that he has removed from the supplementary and annual general warrant is meant to release what we call reserve expenditure warrant to take care of those items that he has withdraw from the budget estimate at the beginning when the budget is being up. Didn't give the power, authority to the accountant general to spend money on those items. Then they're now meant to release what we call reserve expenditure warrant to take care of those items that he has withdrawn for on the supplementary and annual general warrant. Another one is contingency warrant. Contingency warrant. What do we mean by contingency warrant? That is the warrant to be released for any circumstances, any unforeseen circumstances or the event that cannot be delayed. And this will be in operation only if there is no violence or there is high level of that particular event that such degree is very urgency and it cannot be delayed. That is when they can use supplementary general warrant. And that will also take us back to what we call contingency fund account. The money, they will go to contingency fund account to release money for them to spend on those things that cannot be delayed. But where there is violence, they will not use supplementary. Where there is violence warrant, they will not use contingency. Is that clear? Another one is, now let me read it. They said this is issued in exceptional cases where violence is not possible. 2, application of additional provision review such high degree of urgency that issues of fund cannot be postponed until supplementary appropriation act is passed. The contingency fund warrant must first be issued by the Minister of Finance, authorizing the Accountant General to transfer necessary funds for the contingency fund to the consolidated fund account. Therefore, a supplementary contingency warrant will be issued to authorizing the expenditure from the head and sub-head concerned to be released. You can see that anytime they are using what we call supplementary contingency warrant, a situation that cannot be delayed, a situation that beyond present control, it requires urgent, high degree of what? Urgency. As a result of that, Minister of Finance will authorize the Accountant General to release funds through the warrant release to the Accountant General. that such situation to be taken care of immediately without delay. But before they can use supplementary general warrant, then there is nothing like what? Environment warrant. Where there is environment warrant, they will issue environment. Where there is environment provision, they will issue the environment warrant to take care of unforeseen circumstances. Now, what does environment mean? Look at it. This is issued when a result of urgency circumstances during the time the annual estimate were being approved, an additional provision is required under the particular head and subhead as an equivalent amount being saved under the head under another subhead for the same head. However, environment warrant should not be used to create new subhead or for item disallowed by the budget or estimate committee. Environment is only meant for unforeseen contingency that cannot be delayed, and additional of that must be taken care of. They must make provision in that environment at all times in case of any forms of emergency, but they must not use that to create another account or another subhead. To be successful, application for environment should be in writing, state that it is particular head and subhead in deficit, state that another subhead is in surplus. You must, when you are transferring money from one subhead to another subhead, you must state the condition in that particular subhead, whether there is money there or not, in case of future. And before you can do that, there must be money in another subhead under the same environment, indicating that both subheads are within the same economic head. Those subheads we are referring to, under each of the head, there must be surplus or what? One must be surplus, there must be deficit in the other, but the two cannot be what? Deficit. But you cannot use it to create another account. State that after the transfer, the head, the other subhead must not be deficit. I've said that. State that environment warrants are not sought for creation of new subhead. You must not use it for creation of what? New subhead. That is the purpose of environment. On the last part of this one, we have what we call supplementary statutory expenditure warrant. That is another warrant under the recurrent expenditure. Now, for this one, this also authorizes additional expenditure over and above included in the annual general warrant or supplementary warrant from the votes charged to the Consolidated Revenue Fund by the legislation other than the Appropriation Act. That is, they release additional money by the National Assembly to take care of those expenditures in terms of what? Supplementary. Or based on what they have what? They have additional expenditure based on what? Additional budget they are put in place. And this might not be in the budget, but might be additional charges put in place or approved by the National Assembly. Revenue fund, consider charge to the revenue, consider revenue fund by the legislation other than the what? Appropriation Act. Original copy of this will be what? Addressed to the Accountant General, duplicate to be what? Sent to the Auditor General. It is customary for the Minister of Finance to notify the officer who are in control of the relevant votes of that is, they must send a notice. A notice must be sent to the officer in charge. Apart from addressing that to the Accountant General and Auditor General, officer in charge of that expenditure must be aware that supplementary has been released. Okay. Absent of no question, another set of warrants that we also need to look at is what we call capital expenditure warrant. This one is the authorization for disbursement of public funds or public money on capital projects. That is, or the Minister of Finance will give authority by authorizing the by giving the warrant of authorization for the expenditure to be incurred on capital projects. Only on capital projects. This one is meant for capital project. The first one I'll explain, that one is meant for recurrent expenditure. Now, on this part, we have number one, provisional development fund general warrant. Development provisional fund general warrant. We also have development annual general warrant, development supplementary general warrant, development fund reserve general warrant. We also have development fund supplementary warrant. We also have development fund special warrant. We also have development fund bearment warrant. These are the warrants that we have relating to this. Any question, please? Any question, please? Well, absent of no question, we can have it to ourselves. What is development fund annual general warrant is all about? Development, anywhere you see development, is basically meant for capital projects that are meant to be carried out based on the approval. Now, let's see. This authorizes the Accountant General of the Federation to release funds for expenditure on capital projects, such contained in the approved capital estimate, that is, in the capital project, and mandate the officer controlling expenditure to disburse on the capital project. Envisage the authority to incur expenditure will be conveyed after the National Assembly and approved the capital project budget. If the capital project budget is not released, they cannot release the annual general warrant. They cannot release the annual development fund annual general warrant will not be released. Another warrant is what? Development fund provisional general warrant. This will be released when there is capital project that they are meant to be carried on that has been in operation, and the annual capital estimate has not been released. That one will be released. Also will be in operation for the period in line with the Constitution. What does this one say? This is issued before the approval of the capital estimate, that is before the capital estimate, that is what the capital budget is being released by the National Assembly at the beginning of the financial year. That is, that the National Assembly has not released the capital budget. As a result of that, and there is something that's being in operation, they need to continue. They will use what we call provisional development fund general warrant. This is issued before the approval of the capital estimate by the National Assembly at the beginning of the financial year. It authorizes the payment from the development fund account. What do we call development fund account? Hello? Hello?
Sir, please carry on.
Yeah. I'm asking question that what is development fund account? There is a place here they made mention of money must be released, fund must be released from the development fund. What is development fund account? We've discussed it, if you still remember. That is the account that's meant for monitoring capital what? Capital project expenditure. The government create that account to monitor capital projects. Now, the money will be released from that account prior to the time that the budget for capital project will be released. Is that clear? Now, from there, it authorizes the payment from development fund account of such amount that is necessary for carrying on the project which expenditure has been authorized in the previous year, that is, has been in operation. And this will also be in operation for a period of 6 months or until the authority of the National Assembly has obtained approval by releasing the capital budget. The next one is what we call Development Fund Supplementary General Warrant. Development Fund Supplementary General Warrant. This is the additional what? Provision put in place for additional what? Capital projects, which is meant to be approved by the National Assembly. It's meant to be released by the Minister of Finance to the Accountant General to incur money, to incur expenditure, or for releasing of funds for the officer in charge. Now, let's look at it. This authorizes the Accountant General of the Federation to issue funds and the officer controlling expenditure to incur expenditure on a project as sanctioned by the National Assembly in the resolution approving the supplementary capital estimate. When they sanction some project and government now approve it, they now release what we call supplementary capital estimate or capital budget. Estimate also means what? Budget. Honorable Minister of Finance may exclude his own rights by removing some item is allowed. By constitution, he can exercise right, saying that we cannot do that now, even though National Assembly has approved it. He has the right to exclude any item, either capital project or recurrent what? Project or expenditure rather. And at any point in time, that is now meant to take care of those ones that he has removed, either from the annual development fund annual general warrant and development fund supplementary general warrant. He has removed some items. Then is meant in the future to release what we call development fund reserve expenditure warrant to take care of those items that he has exercised his special right on them. That is when he's going to release development fund reserve expenditure warrant to take care of those items excluded from the annual general warrant and the supplementary general warrant. Is meant to release what we call development fund reserve expenditure warrant. After that warrant, we also have another warrant which we call development fund supplementary warrant. Development Fund Supplementary Warrant. This is for additional expenditure over and above the one that has been stated in the annual general warrant, development fund annual general warrant, and development fund supplementary general warrant that are not part of those ones. Government will release, being approved by the National Assembly, or for all this expenditure that has been put into consideration in the previous year, that they are now making towards, they are making them to be available at the current year for the project to be exercised up to the latter. Another one we also meant to take into consideration here. Let's read this one out also for you to have a better understanding. Development Fund Supplementary Warrant authorizes additional expenditure over and above that which is included in the Development Fund Annual General Warrant or Development Fund Supplementary Warrant for the purpose of revoting capital expenditure which was provided in the previous financial year but not fully expended in that year. Accelerate the provision of the all already formally allocated but not voted. They've allocated the fund already, but such are not being utilized. They didn't use them. They did not do the project, but the fund has been released. They can release another warrant to take care of those projects. That is what that one is also talking about. On the second to the last part of this, we also have what we call Development Fund Special Warrant. This is for exceptional cases, which is for contingency. Instead of calling it contingency, that is what they call special here. They are for exceptional cases where environment is not possible and the situation cannot be delayed due to high urgency or high attention being required. High urgency or high attention being required. Are you with me? That is what we refer to as development special warrant. This is very, very important and compulsory. There are some situations that cannot be delayed. The expenditure are capital expenditure in nature, and government need to take care of all this expenditure. They will need to release what we call development on special warrant, which is also in the same position with the one under the recurrent expenditure we have talked about. Any question? Any question? Now, the last but not the least is development environment warrant, which is also meant to serve the same purpose with the development fund special warrant. Development fund special warrant, where you make use of development fund environment, you can use development fund special warrant. But where there is no environment, we use development fund special warrant, where the money will be released from the contingency capital account, contingency capital expenditure account. That is what all these warrants are meant for. They now say, note, all warrants are issued in 2 copies. Original copy are forwarded to the Accountant General of the Federation, while duplicate will be forwarded for the Auditor General of the Federation. A notice to the effect of warrant will be issued to the person, the officer in charge to carry out such expenditure. Any question? Any question? Absent of no question, I'm still coming back to solve some questions here. There are calculations. We are coming back to look at them. But we also need to look at what we call revenue control, fund principles, and apart from fund principles, we're also meant to look at expenditure control, types of funds. We are meant to look at types of expenditure control, also type of fund, everything we are meant to look at them one after the other. Please, any question before I move to the what? Before I move on to revenue control, please. I'm asking question, no.
Let's move on na some response.
No question, Abi. Okay, let's continue. Now, revenue control. What do you mean by revenue control? These are various control measures put in place by the Accountant General of the Federation through the Financial Act to secure the public fund on behalf of the government. Various control be put in place by the Accountant General to secure the revenue or the fund, public fund, on behalf of the government. What are these control we are referring to or we are talking about? The term revenue control describes the various checks put in place to ensure that all money due are received and accounted for. There are various controls put in place to secure the public fund. The revenue control system in the public sector is designed to have the following elements. One, periodic monitoring. That is one of the controls. They will need to monitor the officer in charge collecting the money, collecting the revenue. What is the situation? What are you following the principle we have given to you? Are you following the regulation we have put in place? What is your level of compliance? Are you balancing your account on a daily basis? All these are meant to be properly what? Monitored day in, day out. In order for the officer not to siphon the public money. The second one, policing the revenue administration system to ensure that services are not rendered without charges or levied. There must be charges for any public administration that they carried out anything. The money must come into the company's into the government account. Timely issuance of demand notice for those ones who fail to pay and do the follow-up. That is why at any point in time that you have failed to do your filing, they will forward to you. The tax authority will forward to you that you are owing the government. And if the due diligence is not taken into consideration, then they will come and lock up your space. That is policing and proper monitoring. They will issue demand notice telling you if you don't do this within also period of time, then they will lock up your place. That is part of what we are referring to as issuing of demand notice and policing at any point in time. Now, timely issuance of all revenue documents. They do that. They will issue them out. Prompt lodgement into the bank. Any money, immediately you reach the limit given to you as an officer in charge, you must log the money. You must retire you must remit the money into the bank account being given to you. And the copy of the amount remitted will be what sent to the Accountant General of the Federation. Then they will trace it to that account, whether it's correct or not. Establishment of authority limits. There must be limits for the revenue you can hold on to. Establishment of functional system of internal control and strong accounting system. All these are the control to be put in place. If you don't put all this control in place, then you will not be able to monitor what you are meant to monitor as the officer in charge. And weekly report must also be forwarded, or daily report, depending on the item you are managing. Now, the next one we are looking at is what we call funding principle. Now, what is fund account? Fund account is one of the fundamental principles underlining the government accounting. For stewardship purposes, the income of government is categorized into several funds. That is what we talk about, the head and subhead. Government don't just do anything. They categorize their funds. They can be able to trace them to a particular head and a particular subhead. And during the budget preparation, they can trace them either above the line revenue or below the line items, above the line expenditure or below the line expenditure. We have classes of fund. What do we call fund? Look at what the definition given to fund. They said fund is what? A separate physical and accounting entity in which resources are held, governed by the special regulations, separated from the fund established for specific purpose. What we are saying is this: when we say fund in the public sector, they refer to separate physical and accounting entity. That is, fund is what? A separate accounting entity that is physical in nature. They held this fund for a particular purpose or for special control. We have different classes of fund, but the fund is classified into three in the public sector. We have what we call government fund, we have what we call preparatory fund, and we have what we call fiduciary fund. Let me scroll up, you can see what I'm talking about. Government fund, preparatory fund, fiduciary fund. When we talk of government fund, the government fund, they are used to accrue for the resources which derive from the general tax. We all this one, they are English. When we talk of government fund, these are funds generated by the government through taxation. Through what? Taxation. Or fund powers of government. That is fund that government generated through what? The funding. That is, they give money to people. When we talk of preparatory fund, this is the fund set aside by the government for business purpose, agency or parastatals. Government creates parastatals for business to be carried on, and they are meant to make money through them. When we talk of fiduciary fund, are you with me? Fiduciary fund is the fund being put in place of the government account by another entity, by separate entity, another entity entirely. It could be another nation, it could be state, it could be individual. These are used to account for the resources held or managed by the government in capacity of a custodian or trustee. That is, these are funds kept by the government for a particular purpose as a custodian or as a trustee. They entrusted the money in the government account. What are the type of funds we have? We have what we call general fund, capital project fund, special fund, trust fund, contingency fund, intergovernmental service fund, revolving fund, self-liquidating fund. These are different types of funds we have. When we talk of general funds, these are the revenue generated by the government paid into the consolidated revenue fund account to carry out the statutory what? Expenditure, aside from the federation what? Account. This revenue are money paid to the consolidated revenue fund account. Another fund that we also meant to look at, capital project fund. That capital project fund is the capital what put in place in the development fund account to manage the capital projects, to manage capital projects, to manage capital projects. We also have what we call special fund. This one is created for specific purpose or for special purpose. Trust fund, when government acts as a trustee or they put some money in care of government, they put those money in what? In a trust fund account. We also have contingency fund. That is the account or fund put in place by the government for unforeseen circumstances that beyond what? Control. Intergovernmental fund. This is the fund that is being what? Put in place by the government to take care of what? Governmental clearance fund. From government to government or transition in government. When one government is going, then they transfer the money from that account to another account of the government, saying that this is the balance of the money we have in the account when this government is going. When this particular new government comes in, this is the amount in the account, intergovernmental fund. This is established to provide service to other funds, e.g., government clearance fund, which help to maintain transitionally the balancing between the federal government and other state government accounts. That is when either to state or the government of the state is going, then the federal government wants to fund the state, this and that. That is intergovernmental fund. Revolving fund, this is also known as working capital in the public sector. That is the money set aside by the government to take care of anything on a departmental basis or to set up government setup for a particular what do you call it? A particular recurrent expenditure. Self-liquidating fund. This is the fund which resources are transferred periodically and paid out, which money or amount left has to be transferred to the recurrent fund account, the deposit fund account. In a simple analysis, these are funds put in place for a project that they can pay up their liability on itself. Now, what we are saying is this: there are funds that government sets aside for a particular project in which the project will be funding itself. The project will be paying out that particular money. From the money they are generating from that project, they will be used to settle up, to liquidate that particular liability on that particular project. That is a self-liquidating fund. They transfer from one particular account to another on a periodic basis. The next one we're also meant to look at after this is what we call expenditure control. Expenditure control. Now, on the aspect of expenditure control, there are different types of control to be put in place by the government to control expenditure. This simply means stringent of coordination or various measures put in place by the government in order to reduce or to in order to reduce mistakes or to eliminate fraud, as this particular control is concerned. Let's look at what the note is saying. This is defined as the stringent string of coordinated actions. That is, various coordinated actions, strictly, which have to be taken to ensure that all expenditure are wholly, necessarily, reasonably, exclusively included, incurred for the purpose which they are stated in the budget. These are various control measures, coordinated control measures, coordinated actions put in place by the government to ensure that expenditure that are meant to be incurred are wholly, necessarily, reasonably, exclusively for the purpose being stated in the budget. Not that officers are now using the money for personal expenses or for another expenses that are not relating to the approved expenses or expenditure. Now, what are these controls? We have what we call executive control, legislative control, Minister of Finance control. We have Treasury control, that's Accountant General's office. We have departmental control. We have Officer of the Auditor General, Office of the Auditor General control. All these are various control measures that are meant to be put in place. When it comes to the executive, that is the control being put in place by the president and his cabinet through the ministry and the ministers being what? Managing each ministry. That is the control under the executive, which go in line with the constitution. They cannot do anything outside the constitution. First thing to do is to prepare budget. That is first control. That one will be forwarded to the what? After the preparation, the Mr. President will present the budget in the National Assembly. The National Assembly will look into the budget on a 7 stages. 7 stages. The budget is meant to pass through 7 stages before it can be approved. Before it becomes what? Act. They will call it bill when they present to the House that a certain bill has been presented. After discussion, after several what? The deliberation on it, they will come up with something. At the end of the day, it turns to be what? To the heart, to be heart. We have the what we call introductory stage. That is the what? When they introduce to the House, the first reading. We have the second reading. We have the debate stage. We have the third reading. We have the exposure stage. We have the draft stage. Before they will now what? Approval, the approval stage, before they will approve it. Before it becomes what? Law. Now, let's read what the books here is also saying, whether it is in line with what we have talked about or not. The executive comprises of the president and his cabinet, who have the responsibility for the efficient and effective control of the administration of the country, politically and economically. Politically and what? Economically. The Constitution created 2 other arms of government called the legislative and the judiciary for the purpose of check and balancing. All measures and policy taken by the president are subject to approval of the what? Legislative within the armpit of the Constitution. Within the armpit of the it must be within what? Constitution. Consequently, in accordance with the section 81, subsection 1 of the Constitution, President shall cause by being prepared and laid before each house of assembly at any time in each financial year estimate of revenue and expenditure of the federation of the following year. When they say estimate revenue and expenditure, that is budget. Estimated revenue, what they call national budget. National budget is the statement that shows the proposed estimated revenue and proposed estimated expenditure, telling you what you are meant to what are the means of generating the revenue, what are the likely amount of revenue you should be expecting, and what is the likely expenditure you also want to incur, both for your recurrent expenditure and capital expenditure. Everything must be stated clearly. Then after presentation, the National Assembly will look into it before it becomes what? Law. Now, let's continue. The president, in order to satisfy the provision of this constitution, also appoint a cabinet committee on estimate to advise him on the contemplate policy measures. The policy measures contemplated are transmitted to the budget department in the presidency. Budget ministry is meant to work into that. This development in turn led to the issuance of guidelines on the preparation of budget. As a result, effective supervision is exercised on all the agencies involved in the budget operation. And any unit of the government which requirements are higher than the control figure already issued is notified to defend the excess request. Does it differ from what we have talked about? No. It is a duty of the president through his cabinet to prepare what? Annual budget. The annual budget will be presented to the National Assembly, the Executive House. The Legislative House. The Legislative House is divided into two, the House of Rep and House of Senate. The budget will pass through these two houses after series of stringent control measure on that budget. It becomes they approve it and it becomes law. Then president will sign it into law. That is when they can work into it. That is on that part. The next one is legislative control. Legislative control. The legislative control is another control measure to be put in place by the legislative arms of government. His own control is divided into two. We have what we call the postnatal control. Are you with me? And antenatal control. The antenatal control is the pre-control put in place before the approval of the budget, while postnatal is the control put in place after the approval of the budget to ensure that the budget are well prepared. That is pre-antenatal. While postnatal, to ensure that all what they approve is what they spend the money on, not that they use that means to siphon the public fund. Now let's look at what this one is saying. I've explained it my own terms. Let's see what the note is also saying. The National Assembly is the supreme authority on matter of national finance. Supreme authority on national finance matters. The control exercised by the legislative is both antenatal and postnatal. The antenatal control is the sense in which the legislation considered and approved the estimates submitted by the president. Postnatal control is the review of the transaction after the payment. No amount of public fund must be spent without the approval of the National Assembly. However, Section 82 of 1999 Constitution empower the president to spend from the Consolidated Revenue Fund to carry on the administration of the government of the federation for not less than 6 months. That is the purpose of what? Provisional General Warrant. Development under the capital and under recurrent, we have the Provisional General Warrant. Provisional, that one, when there is no approval or they are still working on the what? On the budget, they are meant to work on what? They can still continue working. They can still continue carrying on the what? The administrative work in the public sector till the budget is being approved, while they will be using what we call Provisional General Warrant, or they will use what we call Development Fund Provisional Annual General Warrant on capital projects. And this can be in operation for maximum of 6 months, or when that particular appropriation act is being released, the one that is what? Shorter between the two. Another one is what? Auditor General's control. Auditors General's control. Auditor General control is meant to scrutinize all the accounts based on the records sent to his office and the supporting documents, and is meant to report to the National Assembly anything that it discovers in terms of what? Extravagance or insufficient or fraud. It discovers anything relating to that, such will be reported to the National Assembly. Aside that, we also have Minister of Finance control. The Minister of Finance control, that one go along with what we call the using of what? Warrant. Let's read it and see what it's talking about. When minister or department, ministry or department require money to pay service, the normal normally apply to the Minister of Finance for the such fund. The condition is that once a year, ministry and para-ministry present estimates. Yes, their duty is towards the end of the particular financial year, they are meant to send their budget, their estimate that they have in their organization based on what they think they are going to do in the following year. Then that will be part of the budget that they want to present to the National Assembly. Then in the process, when they are releasing money, they will know that this also forms part of the budget. This one will be the authority from the Minister of Finance to release warrants. Okay, then present the estimate to cover all the needs and requirements which are expected to be prudent, necessary, and reasonably in accordance with the Financial Regulation and Appropriation Act. The minister passes the Consolidated Revenue Fund expenditure estimate to the president, who will present them to the Federal Executive Council for approval before they are forwarded to the National Assembly as a bill. Then control by warrant. It is also power given to the Minister of Finance to also use the warrant to control the expenditure. The warrant authorizes the Accountant General to release funds for the Consolidated Revenue Fund or Development Fund account. The system of warrant gives the executive greater control over the issuance of funds than would be offered by a system which relies solely on the provision of the Appropriation Act. They cannot spend any money from the Consolidated Revenue Fund account or Development Fund account without the issuance of what? Warrant to the Accountant General by the Minister of Finance. Then, Treasury control. That is the control put in place by the Accountant General of the Federation in regulating the revenue and the expenditure across all what? Across the ministry. Now, let's see what this is saying. The Accountant General has overall responsibility for the total expenditure of government. His office will keep necessary books of accounts to record all the receipts and expenditure. Inspectorate offices for the department to evaluate the system of internal control. Is the one in charge of setting up the accounting system and internal control for all the ministry. And they must ensure that they follow that particular what system or not. They will be what? Held responsible. They do this to ensure that accounting system and maintenance of the various books of accounts conform with the approved regulation and procedures. We also have what? Internal auditor. Every ministry must have internal audit department to exercise what? Control in the resources being put into the care of that particular what? Ministry or department or organization. The Treasury dispatch the internal auditor to the ministry and self-accounting department to appraise the efficiency of the existence of internal check and report upon the inadequacy discovery. If they discover anything, they need to report. We also have what we call departmental control. This has to do with what we call departmental vote group for monitoring the public spending. Departmental vote book allocation book is a record of payment made and liability incurred during the vote or fund approved for each ministry or its ministerial department. Vote book is maintained for each head and sub-head of the expenditure. It is an integral part of the budgetary system. The book is designed to facilitate both washing to ensure that expenditure incurred are not exceeding or exceed the appropriation being released to the ministry. That is all what we need to have idea of. I'm coming back to some question under that on this part. But before I will call it a day, I will also need to discuss part of the control is also using of what? Voucher. There is no transaction that is meant to go out in the public sector that does not require the filling of voucher. What is voucher? Voucher in this sense is referred to as a document which serves as evidence of a receipt or payment of money. Specifically, government financial regulations state that all payments must be by means of prescribed form, which is voucher. You must fill that form, voucher, before they can release any money out for you for monitoring sake of that particular expenditure. We have different types of voucher. We have what we call payment voucher. We have what we call receipt voucher. We have what we call adjustment voucher. The payment voucher is for the what? Any payment to be any money to be paid by the government must be supported with a payment voucher. Without that payment voucher, the transaction will not fly. This is to serve as evidence that payment is made for a particular goods or service rendered. Vouchers are prepared at a point where payments are to be effected. When payment is meant to take on board, they prepare the voucher before they can release what? Either the cash or the check. And it's going to be stated the means of that payment, whether cash or payment on that voucher. What are the quality of this particular voucher we are referring to? This voucher must have the date of the voucher, which indicates the lifespan of the voucher, the class code, the classification code into head and subhead of the expenditure. We also have the amount in word and figure. We have the payment voucher number. We have what we call the voucher number. We have what we call description of the payment, the name and the address of the payee or the beneficiary. We also have the supporting documents such as local purchase order, invoices. We also have what we call store receipts. All those documents, they are meant to go along with the voucher. We also have authority such as the signature of the officer controlling the expenditure and the types of warrants which were released. We release the money, the signature of the cashier, the signature of the payee, the voucher certification. All these are meant to be stated or meant to appear on the voucher to make it look nice that this is the real voucher. Rules guiding the issuance of voucher. 1. The voucher is certified for payment by the officer who authorizes it. The authorized person must not be the same thing as the initiator. The initiator must not be the same thing as approver. Now, the next one, the voucher is stamped, check and pass for payment. The voucher is stamped, entered into the vote book. The officer in charge of that vote book needs to monitor that too. Now, we also have it as this. Government financial regulations specify the rules which should be strictly observed in the preparation of voucher, payment voucher as follows. Voucher shall be made in ink or blue pen. It must not be printed one. Blue ink, either black ink or blue pen, must be used to write that voucher. It indubing pencil or shall be typed written. All copy must be what? Eligible. No erasure of any kind. You must not erase anything, whether in typescript or manuscript. Those are the conditions supported. Use of collecting fluid is not allowed. Correction fluid on voucher is not allowed. You must not use it there. A single tick, horizontal line should be drawn immediately before and immediate after the naira. That is to cross it. There is a thing when you are balancing an account, there is a line we normally draw. That is what we mean by that. To ensure that it is only the amount stated, not that they want to slot in another figure. Those are the conditions for that voucher. We also have what we call receipt voucher. Now, when they are doing the payment voucher, it could be in forms of check, it could be in forms of what? Cash. Now, there are other where voucher reported loss. The following procedure should be followed. Loss voucher, listing. Prompt investigation should be carried out. It should be established whether the payment has been made on it or not, whether that voucher has been, the payment on it has been made or not. It should be ascertained whether or not the cash drawn is still at hand, whether you are still having that cash at hand. Now, the next one, reports should be made by the account officer to the accountant general stating the circumstances of the loss. Now, there must be a prompt investigation to be carried out on the voucher that is lost. The second one, they must establish whether the payment has been made or not. They must also establish whether the cash drawn is still at hand or not. Then the officer in charge, the accounting officer in charge, must report this case to the accountant general's office, stating the circumstances relating to the loss. Those are the conditions for that voucher. Then we also have what we call receipt voucher. For the receipt voucher, that one is meant to be used as an evidence that a certain amount of money or is being received on behalf of what government. A receipt voucher is a document of evidence that some stated thereon has been received. Any receipts in the government purse must be supported with Treasury Form 15, which is pay-in slip form with attached Treasury receipt Group 6 before it's regarded as the authentic receipt voucher. Now, evidence just adjustment voucher, that one is for what? For correction purpose. Let's see what it's saying. Adjustment voucher is a documentary evidence of former entry which enable transfer to be made from one account to another account without actual receipts or payment of cash. Adjustment voucher is used in any of the following circumstances: payment for inter-ministerial services, correction of accounting error arising from the misclassification, ultimate allocation of unallocated store when there is a transfer of inventory from one store to another store. That is what they mean by that. Then carrying out the adjustment or transfer between accounts. That is purpose of what? Adjustment voucher. Then adjustments are usually initiated by the creditor department, and sent to the debtor department for acceptance for the charges. The following particulars are required for an adjustment voucher. 1. Reason for the transfer or adjustment must be stated. Voucher number, month of the account, particulars of the treasury or the audit query. That is, in the process, there must be an audit query that will support that for the investigation to be carried out. This is all what you need to know concerning this. Any question?